Hello, good afternoon, and welcome to Trading the US Open live here at the Live Trade Room. And now today is Thursday the 18th of October. And just to explain what you can expect over the course of this trading session, we're professional traders and we trade with live capital every single session. So you will see the full consequences of all of our decision-making processes, both good and bad. It's a transparent trading environment. And what we look to do is to identify high probability trading opportunities where we look to execute trades with a high degree of consistency in our approach. It's a very, very important part of what we look to do here with traders. And a high degree of discipline as well when it comes to managing trades. So what we look to do is to look to mitigate risk as quickly as we possibly can. And we have an approach to profit, which is that we look to cut our losers short as quickly as possible. We will get quite impatient with losing trades, but we'll look to let our winners run. So hopefully that's what we will experience today, and that's generally the basic principles behind our approach. Okay, so just before we begin, if we could start with our risk warning, please do, of course, familiarize yourself with the risks involved in trading these markets, and just take note of the risk warning up on screen now. Before we begin, let's do a quick review of potential market moving news. So this is very important for every trader before they sit in front of their trading screen to have an understanding of potential news events and I think I've just closed down the actual web page, so I'm just getting it back up on screen. And so this is Forex Factory. There we go. And so what we're looking at here is we've seen a negative sales figure this morning for the British pound. And we saw a little bit of initial buying creeping into the market. Then we saw a bit of a rollover to the downside. Not really quite breaking the lows that we would have expected this market to break, and saw a constructive structural failure pushing prices back to the upside off the back of that figure. So what we've had is negative news, potential positive price action. I must admit, unless that has changed over the last hour, which is very, very possible in these markets. So we'll have a look at the pound very, very shortly. And the only other major news for the day is the EU Economic Summit, where European leaders meet to discuss a whole variety of issues. None as important probably right now as Brexit negotiations and what that means for the Eurozone and potentially for the UK as well. All they decided to come together and agree was the fact that nothing is agreeable just yet. So so that needs to be taken into account. So we're likely to get politicians going to the media after certain conferences, no doubt making statements, and the markets will react accordingly. So we do have to bear that in mind when we're trading these markets over the course of yesterday and today. Now we're still in our, just to touch upon it, we're still in our sell trade in the oil market. So we've broken even on this trade, and we're getting this now extended move lower. So there's still every potential for this market to continue. So we're going to look to let this winner run from this morning's session. So far so good on that. And when we get the next high, and we get a rollover to the downside, we can probably, if we don't book in profit at these lower levels down here, then we might look to just continue to let the market run and trade the structure. So a couple of good trades. Yesterday we had a good trade in the oil market, and now we're in this market again to the downside. So hopefully we get some good continuation pushing prices lower. Okay, so that's the US oil. Just to share with you what we've seen with regards to the pound dollar. We've had, and I did allude to the fact that over the last hour it may have changed, and in fact it kind of has a little bit, where we've got a structural failure to the upside. That's above the 31.18. We took a small trade at these highs with I think 11 pip stop loss, with the expectation for this market to continue lower, and it did that, but we really failed to break the 3100, which was our primary aim. And then some buying started to come in, but as you can see, not much has happened. We haven't really seen the follow through we would like to see, so we're very likely to see continuation to the downside. So this can still be a viable trade for us. However, we want to just make sure we look to trade this market before the 3100 and not necessarily above that level. So we can certainly continue to look at the pound dollar. Not an awful lot happening in the euro dollar actually at the moment. The dollar yen has just sold off today a little bit. We're likely to see a little bit of softer price action in the US equities. Just right now I might just have a quick look at this. So that's looking a bit softer as well. We've seen this market just roll over to the downside. However, we do have the markets open in over an hour and 15 minutes. So this is very much likely to change. Like it did yesterday, we had a strong acceleration lower and then a really strong pullback. So it still remains to be seen where the high probability trade currently lies with the S&P. So going back to the yen, the dollar yen, we're seeing this market just roll over just a little bit for us as things currently stand. But we still expect this market to continue higher, but we may need to be nice and patient with that. The dollar Swiss is threatening to break above the 99.53. So we've had a fairly strong rejection to the downside, but let's see if we get that continuation move to the upside. There is a little bit of strength in some of these markets, dollar strength should I say, in some of these markets. We have the weekly high just sitting above the dollar CAD, so 30.69, and we're getting very close to that level, so it's interesting to see how price behaves around that level. So we might get some really nice, clearly defined breakout above that level, perhaps in the next hours or maybe even days. So a number of these markets are setting up quite nicely, and we'll continue to look at them very carefully. We still have the potential for some downside movement in the dollar, in the New Zealand dollar. The Aussie dollar has been a little bit stronger today, largely off the back of the news, which was a little bit indecisive, to be fair, if I take you back to the employment data. So what we've seen is the employment change number is less than expected, but the unemployment rate dropped drastically from 3.5 to 5%. So that is the lowest for quite some time. We'd have to go back to this in here, which is May 2012, the last time we were at these levels of unemployment. So as you can see, I mean, that's pretty much across the industrialized world, we are seeing quite low employment figures, and 5% is considerably low. Now, we never saw the peaks that we've seen in other economies, even though we've seen a sort of a slight increase really up to the 6.4%, but now we're back down to 5s. So that's a good news story for the Australian dollar, which is why we're seeing the Aussie dollar just continue to the upside. So let me bring up the so that's responsible for this strong move. New Zealand, not quite the same, doesn't have that same impetus, so we still like this market rolling over, but we might need to take a bit more of a longer term view of this market. So now we're getting that little flush through that we were talking about. So what we'd want to see is a pullback now, and maybe look to get into it maybe around these levels. We would again have a relatively small stop loss, and if we start seeing some dollar strength start to creep in, it looks like we could potentially see a little bit more dollar strength start coming into these markets. And if that's the case, then this would be a good. So instead of getting this move back here where we were looking to get into it, we obviously had the strong reversal like we did yesterday after the data. We had some negative data out yesterday impacting the British pound, and we had a bit of bullish price action come in before we saw the actual move to the downside, and we've seen exactly the same thing today. So going into these trades almost with your eyes open is very, very important to see what's happening. What are the what can you tell and what can you see from this information in front of us? And that's probably why we really like to trade with Japanese candlesticks, because of the information that it gives us. It's like almost reading a book, and we can glean certain bits of information, very useful bits of information from the price action and what we're seeing in front of us. So if we can get a little bit of a pullback, maybe even to the 3102, and we get this little rollover price action back below the 3100, we could look to get into it at that point. So I think we should still continue to keep a close eye, even though we've tried to sell this once before. It might be worth taking another sell trade, but we shall, of course, bide our time. So just looking at the last couple of commodity foreign exchange markets, the euro pound is just bounced back off this, and the euro strengthened now against the pound, so that's in keeping with our pound dollar trade as well. The yen is beginning to strengthen, or has strengthened, and maybe even pulling back a little bit. Not much happening in the euro yen. Bit of strength beginning to creep back in to the gold. We do like this market pushing higher. We are currently below the weekly low, the weekly high of 12.26. So we would like to see that level be broke. And if we get this little bit of a pullback here, and tomorrow we start getting continuation above 12.26, it could then give us a really good opportunity to push prices higher. US oil, we're already in this trade to the downside, and there's no reason to get out of this market just yet. So hopefully we get a nice continued move to the downside. So we'll look at that in some detail. It was either or, either trading the UK oil or the US oil. Obviously both are moving to the downside, so no real reason to double up, even though, as you can see, it's quite a constructive move lower as well. So we're in the US oil, very likely to see this market continue lower. So let's, both oil markets are selling off, so let's stick with the trade. So looking at the US equities, we're seeing the market sell off these levels, and continue lower. So it'll be interesting to see that the US equities open in about an hour and 10 minutes. So it'll be interesting to see the volatility at that point. The US 100 just selling off these highs here, as you can see. UK 100, not an awful lot going on, and kind of same situation, with probably more of a bearish biasness in these markets now. So that is very much, unless something changes, which can happen easily. Yesterday was looking very, very bearish for most of the day, and we ended up really turning around quite considerably. So we need to be open to that as a potential consequence. Okay, so now we're getting this little bit of pullback price action. So the reason why we like that 3100 level is that we're now sort of breaking back below this level, with the potential for it to squeeze down to the 3027. So that's why we're looking closely at the 3100. And let's see if we get a close on this minute time frame. We want to make sure we trade the correct volumes when we trade these markets. So let's see if we just get another little tick lower, we'll look to get into this market here. We seem to be up and down in the last sort of 4 minutes, so I'll draw your attention to the level. That's what we're looking to see, that level break, and then we'll get into it to the downside with a high degree of consistency, if nothing else. And we'll look to place our stop loss just above this level in here. So we're only really talking about a relatively small risk on this trade. So very close to selling the pound dollar. So that's the 30.97. So let's see if we just get this little thrust just below that level. Well, there we go. Let's get into this for the second time today. 3108. So what we're not really seeing is real strength and real determination for this market to push lower. So we're kind of grinding lower. So we kind of need to be prepared for some additional grinding lower. this is a relatively long period of time for what is a 30 pip range in this market. So let's see, this is the beginning. We're below the daily low. Let's see if this is the beginning of the next move lower in this fairly choppy kind of price action. Okay, so so we're now in the pound dollar for the second time today, and we are also in the gold market. Sorry, the oil market, the US oil market. So currently just seeing a little bit of a pullback from this level. This is probably down at the 50 level. The 68, 62 could still squeeze a little bit lower. So we're getting a pullback. The level we would anticipate getting a pullback to is the 68.92. So that's the level we would need to look out for. So again, in terms of exposure, we're really focusing on keeping these stop losses fairly short. So we've got a 14 pip stop loss. We're not that interested really in increasing our exposure really at this point. We have had a lot of choppy market conditions really over the last 6 weeks, and what that enables us to do is to focus on protecting our capital, where we're not going to give 20, 25, 30 pips exposure to a market, because what we want the market to do is to perform as per our expectation relatively quickly. And if that doesn't happen and they start sort of reversing on us, then we don't want to expose that extra capital, because the way that the markets have been behaving, that wouldn't necessarily, in our opinion, be a prudent approach to take. So in other markets, like we've seen from sort of April through to June, those of you that were trading with us live at that point, you will probably remember that we were often 20, 25, 30 pips depending on the bit of price action, but certainly we're a lot tighter with our exposures. So what that can lead to is maybe a few more losing trades than we would ordinarily like. But like when we get a winning trade, we're looking at a significant multiple of our initial exposure. So I suppose the oil market is pretty good. Is a good example. That's the 49. 69.43. So we just had our stop loss above the 29.62, and we've mitigated the risk, but now we're kind of currently looking at a 3 times our risk exposure. So that's the kind, and we've mitigated risk, so there is zero exposure to this market, which is obviously a great position to be in. And we know that markets do not move in a linear fashion, and the reason why that's particularly important is even a downtrend, it never moves in a straight line. It never moves like this. So you have to, when you trade these markets, you have to bear in mind the fact that you're going to need to have the mental resilience and the psychology to cope with the pullbacks, and that's what this is right now. So actually the level that we would expect this market to pull back to is more like the 68.92. So as long as it conforms, it could be anywhere within this kind of range here before it starts to move lower. It's the structural failures that could mean slightly more to us. So so we're still at 3,100 for the pound dollar, and we're currently experiencing a pullback on the US oil. So so let's see how we get on with these trades. Of course, guys, do please feel free to post any comments or any questions that you might have, or maybe even some trade ideas that you're looking at. This is a kind of an open floor. I'm quite happy to, while we're in trades and looking for opportunities, quite happy to discuss other opportunities. There's obviously many markets to focus on. We look at sort of 18 of the most liquid global markets out there, so so that we get a bit of volatility and a bit of movement that we can look to work with. So those are the markets that we like to focus on. Maybe you are looking at some additional markets, and if so, do let us know what they are. I'm happy to look into them as well. And do take note of the information towards the bottom of this recording. We're still offering a 14-day free trial, so if you'd like to take us up on that, please do. Please do feel free to do so. Okay, so just posted a little comment on there, so you know, do feel free to interact. Plus, do see the information below this video, and if you would like to join us, you're very welcome to do so. Over 76 live trade rooms per calendar month. So we've got various different types of live trade rooms depending on your time availability, the capital you have available, and we're all geared up to support traders who want to trade obviously with live capital. So that's really where our focus is at. So hopefully you can join us. You get instant access, 2 weeks, no contract, no significant commitment of any kind, just the opportunity to join us. And if you do want to stay on, you can certainly secure one of our memberships for just $9.99 per calendar month. So that just literally contributes towards your access to the webinars. So hopefully you'll find it a very rewarding and profitable and interesting education for you. So so do feel free to join us, and you can go to our website as well, www.TheLiveTradeRoom.com, for more information. Okay, so we're currently seeing the pullback in the pound dollar. Same situation for the US oil. So all we're simply doing is looking for the next leg to the downside. So unfortunately, a little bit of patience is required right now. What I will do is just have a quick flick through, see if there's been any changes in some of these markets. So nothing, as you can see, in the euro dollar. Again, not much sort of variation in price action really for the dollar yen just yet. There's the potential for this dollar Swiss to just start creeping to the upside, and it's had a bit of a move lower, and we've rejected that move now, with the potential for this market to actually squeeze above. So we might see if there's an opportunity here. We've got this level just sitting here. The last time the market got to the 99.55, we saw a fairly significant rejection of that level, and literally over the last 40 minutes or so, we've had a really strong 10, 20, 30, 40, 50, 60, 70. Sorry, yeah, about 60. Over the last hour, we've had a really strong move to the upside. So some dollar strength feels like it's creeping into the market, and we can actively see it with a potential break above this level. So let's see if we get that or not. So we're getting that strength beginning to creep into the pound dollar. The gold still seems to be sort of increasing a little bit, and we could still have this market just push back a little bit further for us, but the next leg further to the downside could give us a good opportunity to book profit around these lower prices down here. So a couple of good trades. The markets are beginning to feel like they're a little bit more reasonable over the course of this week. Certainly, I think it was last week where it was very unreasonable price action, like very, very difficult. Or was it the week before? I think it was probably the week before, where you're in this sort of market moving lower. The market pulls back. It fails to make a new low. It starts making a new high, and then you see this failure to the downside, and then failure to the upside. So that's a nightmare for traders, because you get multiple structural failures to the upside, to the downside, and then back to the upside again. So really choppy, and that's what we refer to when we refer to choppy price action. It's action that's really not that easy to work with, and it's giving you mixed signals literally all the time. And obviously, trying to trade in those environments, we like to reduce our risk down, take the pressure off in terms of your monetary exposure. Don't be trading these markets with any high degree of stress and anxiety. Try to keep your psychology on a very stable footing, and you can amend and change your approach to trade size and your approach to pip exposure in these markets, and all of these things starts to formulate effectively how your institutional traders approach. They take bigger risks on certain opportunities more so than others. Not all trades are the same. They can't be dealt with in that way. So let's see if we get some continuation. So a little bit of patience, I guess, is just required for now. So nothing in the euro dollar, not much movement. Potentially the dollar could strengthen against the Swiss. Not much variation just yet in any of the other dollar pairs. Euro quite strong against the pound. Pound quite weak against the yen. Not much going on with the euro yen. Gold, clearly there's a bit of an appetite for gold again today. Obviously the EU economic summit can sort of add another degree of uncertainty. Will there be a Brexit deal or not? Is it going to end badly, and is there going to be a lot of sort of chaotic developments off the back of it? As a result, this is very likely to support the price of gold and we're likely to see that market continue to push higher. The 1226 is an important level. It's just the weekly high. So far we're below that level, so if we start breaking above that level, this could definitely give us an opportunity higher. We like the potential for the oil market to just continue lower, so hopefully we'll get that move pretty shortly. But just literally patience is required for that market as things currently stand. Okay. US oil, not much is happening. Sorry, US equities, not much is happening. We're still threatening to push lower. We do have the open in about 50 minutes, the US Open that is. Nothing in the FTSE market and very little in the Euro stocks. So we are actually trading, probably marginally speaking, the more significant markets out there, even though this on a daily time frame doesn't really fill us with that much joy. The only other market we could potentially look at if some more strength starts to come in would be the dollar Swiss above the 99.59 level. And I suppose for that reason, what we'll do is we'll just quarter the chart. So we'll stick the pound. We'll go into this on a smaller time frame, just a 5-minute time frame is fine. So we're getting a little bit of rejection of these lows. So we are attempting to push higher. What we don't want to be doing is necessarily jumping in at these highs. So we've already had a really strong 30-40 pip move to the upside. So we don't want to be buying the breakout, but the pullback is what would interest us if we get that opportunity. So the next level for us is the 68.62. You see, if we get the dollar strengthening, which it's looking that way, getting a bit of strength creeping into the US dollar, that will support our pound dollar trade. But it's likely to put a bit of pressure to the downside on the gold market. So what we might do is just switch between the two. Okay, not great price action yet. There's a bit of a floor created here in the S&P, so it's be interesting to see if we get a break below 27.98. We might see some continuation to the downside. So it is, for the time being, technically a little bit of an important level. So we are still just hanging around this 3100, so we haven't really moved. There's been probably a 6 pip movement in the pound dollar. The other reason, of course, for not giving the pound dollar any more room is sort of fundamentally really the UK. If they get close to a no deal, it could weigh really heavy on the British pound until a deal is struck, and then if there's no deal at the end of that process, then we're likely to see the British pound really see serious devaluation. So fundamentally speaking, for now, these prices should be rolling over to the downside. We've had some less than expected CPI data yesterday. We had less than expected retail sales. The pound dollar is continuing to move lower. It's just doing so in a very kind of choppy fashion. So we want to get into this move if we can, if it'll give us the structure to be, to make a lower high and then get this little flush lower. So we're only probably 8 or 9 pips away from flushing beneath these lows. So we'll continue to look at these trades. What we will do shortly is just switch over to the live trade room. We do have traders currently there, so I'll be switching across now very shortly. Not much has happened really during the session so far. We still expect it lower. It's going to be interesting to see whether we get an extended pullback or not. But we're certainly not willing to expose any more capital on this trade. So what we want to see is a constructive break below the 30.95. We're only sort of 6 or 7 pips away from that, so we could get that flush very quickly. We're seeing the dollar just look like it's creeping above the 99.59 level, and we want the US oil to just break the 68.62 level, and this would give us hopefully some good opportunities. Okay, so like I said, we do have to switch across to the live trade room, so do feel free to just read the description below. Any questions, obviously, do contact us. Do go to our website as well if you want to get a bit more of an understanding about our products and services that we have available, all at very affordable cost. So there's we're wanting to make sure that you can access the right education and access live trade rooms where you're trading with professional traders without it being a significant barrier to access. So hopefully you'll find it useful. We're just seeing this little breakout now to the upside. That should benefit us in the pound dollar. We're just hanging around this 3100 level as things stand, and I think the oil market is just taking a little bit of a breather. So we do expect both of these markets to continue lower. It looks like there's a little bit of dollar strength just beginning to creep in. And let's see if we get this little move in the pound as a result. Okay then, so this is probably a good time for us to wrap up for the session. So like I said, we're going to switch across to the live trade room, so hopefully we'll get a nice move lower in the oil. The pound dollar will continue lower. This is our second trade that we're looking to trade this to the downside now today, and we do like the dollar Swiss above the 99.59. If we get a pullback to that level, that could be a really good opportunity to take this market higher. So potentially a couple of trades in the pipeline. We're already in 2 trades at the moment, so hopefully we'll get this little flush lower here in the US oil market. So from everyone here, thanks very much for joining us. Do take care. We're going to switch across to the live trade room now, so do feel free to go to our website for more information, and do click the link below, and do like and subscribe to the channel if you can, or even perhaps just give us a thumbs up if you've benefited or if you've enjoyed the session. It is a live trading environment, so obviously that's what you can expect from this session, but we do have lots of interesting new products coming online very shortly, so we'll be excited to announce those. So hopefully you can be a part of our journey. Do click the link below if you would like to take us up on a 14-day completely free trial, which is there available for you. So from everyone here at the live trade room, thanks very much. Do take care, and we look forward to seeing you next time. So for everyone here, bye for now.